subscribers, we're going to go ahead and raise the bar. Raise the bar. We're looking at 3,000 subscribers by the end of November. 3,000 subs by the end of November. Go ahead and raise that bar. Go live. Let's go, baby. All right. So, guys, look, this is what we're going to be doing from now on. No more pop-up Zooms. We're going to be doing go live pop-ups. So, the one thing I love about these go live pop-ups is if you're at work and you miss out on this, you can go back and watch the replay. Okay? You can go back and watch the replay. Let's go. So let's go ahead and get into it. No more nonsense. Go ahead and get into it. Go ahead and give you guys what you want. Get everybody what they want, what they need. Woo, let's go. No more freebies. All right, this is why we're here. Perfect. All right. Say that again.
Gotta pay to play.
That's right. You guys are paying for it. Might as well get it. Okay. So, let's go ahead and take a look at. I want to break this down for you real quick. You can see my screen, right?
Yep.
Perfect. All right. Now, here's the question.
It's 8 o'clock.
Thank you. A lot of people are asking this question, and most new traders are confused about this. But Oren, when I draw, I know you tell us all the time, when the market drops down and then it pulls back, whether it pulls back 25%, 50 or 75%, it doesn't matter. When it pulls back, you tell us to draw a line. Why? And guys, this pop-up live, we're actually doing a live training. So I have two guests here from New York. All right. I have the founder of the Harlem Trade House, Evelyn Rodriguez, in the building.
Hello, hello, hello.
Woo! And then I have Nasia, the innovative. Give me some more. I ain't gonna say the other part. I ain't say the other part.
She's the queen of Brooklyn.
The queen of Brooklyn in the building. The founder of Innovative Investing House. Make some noise, Nation. We all know New York can get louder than that. But anyway, so
the laugh is louder.
I'm going to be training them while I'm training you. Because they're going to be asking questions. So I know a lot of you have the same questions, but some of you are afraid to ask these questions. Okay? So let's go ahead and get started. Now, Nasia, when that market drops down and it pulls back, you're probably saying, but Oren, how far is this market going to drop down? And I want you to look at it like this. We don't know yet. Right? That's why we're going to use this tool called Fibonacci. Okay? And with this tool that's called Fibonacci, we only use it when we have something that looks like this. 1, 2, 3. Okay? And then we have 1, 2, 3. This one is in the middle. This is called a swing low. All right, I'm going to tie all of it together tonight. It's going to make sense. When you have 1, 2, 3, 4, 5, okay, 2 candles, let me get this one out of the way. That's a total of 5 candles. How many candles make a swing low? 5 candles, right? 1, 2, 3, 4, 5. So the one in the middle is going to be the lowest one. But in order to draw my fibs, I need what we call a swing high. I need a swing high. Down here is my swing low. And Asia, why is this my swing low? That's the lowest point. So I need a swing high. In order for this to be a swing high, I need this. You got one candle at the top, right? Do we have two candles on the left lower? Do we have two candles here? No. So if the market decides to drop back down, boom, and boom, lower than this one here, this is my swing high. Okay? So this is the lowest one. Here's the high one. Okay? Here's the low one. Here's the high one. Does it make sense yet?
Yes.
If you're confused, I want you to tell me you lost.
No, 5 candles swing low. Lowest point is below the candle.
Mm-hmm.
5 candles and high. 2 low candles to each side.
Perfect.
That's your swing high.
Perfect.
Okay.
And Evelyn, just when you get a chance, just let me know what the comments are saying also. Okay, perfect. Now I can draw my Fibonacci. You cannot draw your fibs if you don't have a swing high or swing low. This is where traders mess it up at. So if the market is rising up, I can draw my fibs in the direction of the push. Okay? I could draw my fibs in the direction of the push. Now, see where my swing high is? Notice how the market is coming down. 1, 2. At what percentage did the market stop at? Perfect. So if the market decides it wants to make a measured move like this, boom, there it is. And usually, if it comes from here down to here, that target would be at the 1.5. So if I was to add my 1.5 extension on, 1.5, it'll just be a measured move. Reverse it. There it is. Right there. Measured move. You see it? 50%. Perfect. Look at that. Measured move. But we can't draw our fibs if we don't have swing lows and swing highs. Okay? Rule number 1, in order to draw your fibs, you need swings, lows, and swing highs. Perfect. All right? Everyone got this? Type 1 inside the box if you got this. Jeez. We got 200 people on Go Live. On the pop-up.
Let's go.
On the pop-up Go Live. Over 200 people there. Okay? So now, everyone got it, right? Got some ones in it?
They're coming in.
Perfect. Okay. So now that everyone understands that, now you're going to understand this part. As this market is dropping down, you don't know when it's going to pull back. But in order to call this a swing low, we need 2 candles on the low, 2 candles on the left to be higher, and 2 candles on the right to be higher. All right, we already covered that. Okay, so it'll look something like this again. Boom, boom. It'll look just like this. Okay, then 1, 2. Now I got to swing low. The one on the bottom is a swing low. When you get your swing low, your only job as a trader is to draw a line. That's all you have to do is draw a line. Once you get that swing low. A swing low is going to come from a pullback. The market is going to drop down. Okay? Tell them pay attention to the lesson. We got a holiday. Market ain't doing nothing. It's a holiday going on, team. Market ain't doing nothing. Okay? So now, swing low, the market pulls back. You can draw your fibs if you want. Which way is the direction going? Up or down? Down. Perfect. This market pulls back around 50%. Sometimes it'll give you a shallow retracement. Okay? Write this one down, team. The direction of the push is down. Okay? The direction of the push is down. If the market pulls back 25% and drop, it's a strong trend. If the market pulls back 50% and drop, it's a normal trend. The market pulls back 75 to 100. What do you think the trend is doing? It's a weak trend. The trend is getting weak. Because usually when the market pulls back 75 and 100, it's usually going to hit that top and pull back to a 50% and trade in the opposite direction. If it's 50%, it's a normal trend. It keeps going. 25%, it's a strong trend. It keeps going. But 100% and a 75% retracement, that trend is getting weak. And what if that market breaks out of the 100? It did a full reversal. A full reversal. Now it's definitely going the opposite direction. All right? Type 2 in the box if that makes sense. Oh yeah, relax, big time. Okay. They're coming in because they're about to start understanding it. It's going to make sense now. Okay, let's continue. Now, market comes up to the zone and drops down. They may give you that 1.5 take profit and reverse and pull back. Your job, draw a line. The first zone right here, you're going to put left shoulder. Why am I putting left shoulder right here? may not just be Monday's low. A left shoulder works like this. If the market drops down and pull back and you draw a line, that's your left shoulder. Because if the market breaks lower, making a new low, and does a V bottom coming back up, this creates your head, right shoulder, take the market up, correct? But let me show you what happened when market conditions change. Well, this is the basis that nobody's going to show you. Okay, so now, do we have another potential left shoulder right here? Nasia? Okay. Because at this point, we don't know what's going to happen. We don't know if this market is going to shoot up or if it's going to be a continuation down. Remember, you draw your fibs from here to here. We came up 50%. You don't draw your fibs from here all the way down here. You draw your fibs from this level down to here. What percentage did you come up to now? 50%. But the market continued to drop lower. And it pulls back again. What are you going to do? First thing you're going to do as a trader. Why? Good job. Because it's another swing low. And what we're going to put right here? Left shoulder. And you're saying to yourself, but Oren, I have all of these left shoulders. I have left shoulders everywhere. Left shoulder here, left shoulder here, left shoulder here. When am I going to show the head? Write this down, team. Whatever you do on the left side will prepare you for what's going to happen on the right side.
You have to need to find out if it is an inverted head and shoulder or regular inverted head and shoulder.
All right, write this one down. Whatever you do on the left side will prepare you for what's going to happen on the right side. Remember that. Whatever you do on the left side will prepare you for what's going to happen on the left side. It's almost like whatever you do today will prepare you for what's going to happen tomorrow. Does that make sense? So if you do absolutely nothing today, what are you going to get tomorrow?
Absolutely nothing.
But why? I want something for nothing.
No.
I thought you told me I could build my business.
That was the wrong one. It was consistency.
So, give me 1 second.
1 second, team.
So far, they enjoying themselves?
You guys enjoying yourselves?
Will this pop up on a Sunday? They can be anywhere. That's right. So, I had to get a sip of water. Whatever you do on the left side will prepare you for what's going to happen on the right-hand side. Okay? Don't be mad that you didn't get your head yet. That head is going to come when it's ready to come. You don't have enough money to push the market up.
Yes, knowledge.
You don't have enough money to push the market up. So look what happens. The market says, boom, and he said, come on. Another left shoulder? Another one? Another left shoulder? and then the market does this. Boom. Uh-oh. Here's where I'm going to hit you at, team. Right here. Boom. Right here. Wow. Okay, here's the fun part. Now we know right here, and this is going to help you understand levels. Okay? Oh, you pissed off because you got another left shoulder. Boom, right there. All these left shoulders, all these left shoulders. But now, usually the market breaks off the bottom low and retests off the resistance, right? Okay, it's been doing it over and over. It breaks support and retests resistance, right? Break what used to be support, retest resistance. Break what used to be support. This time, did it retest resistance or did it break through? It broke through.
That would be a lot of hits on the trend line.
Nope. Not all of those points were hit.
You connect the first two lines and you extend it.
That's right. Let me prove it to you. I'll start from the top. If they let me. Boom. Watch this. The first one I hit, the first one I touched, the first one I touched, and boom. Y'all see that now? You see? Someone said there will be a lot of hits on that trend line. No. The first one you touch, and here it is right here. This did not touch. This did not touch. Now, this one did touch. But you're thinking now, at this point, oh, this is going to be a buy. How many of you would say, buy this move right here? Type 1 inside the box if you're ready to buy, if the left shoulder is finished and we're now creating the head. Type 1 if you're ready to create the head and buy this thing on the right shoulder. Robin. All right, let me see those ones. If you're ready to start buying this right shoulder, type 1 inside the box.
I buy on retest.
Okay.
It hasn't broken like why buy? We on retest. Nope. Sell. No need. Another touch. Buy on support. No, not yet.
Somebody said buy on support though.
Yep, someone said it rejected. One, that one. No. No, you evaluate it, say friction.
I don't know what that means.
Wait for retest.
So now look, you ever see levels where the market, you ever look into the level system and the market broke back into the zone and then came all the way back out of the zone? Coming back down like this? Anybody ever see that? And you said, come on, man. I would have bought right here and you would have lost money, right? Well, today we're going to help clarify why this wasn't a buy. For several reasons. Not just because of the trend line. The trend line is given. All right? Not just because we're saying to ourselves, all right, on the trend line, we only touch 1. Okay, here's number 2. All right, here's number 3. Okay, that's obvious right there. We know that. But there's another reason why I wouldn't have bought right here. And that number 1 reason is this. Right here. And we're going to go over to the chart so you can see it. A head and shoulder pattern starts like this. This right here is my initial move. Right here is the end of the move. What percentage of the move did I get back right here? Okay? percentage of the move did I give back there? And what percentage of the move did I give back here? Okay? Perfect. What if the market does this? It breaks out, giving back 100% of my initial move. Well, matter of fact, let me do this first. It came down, broke out the low. It came back 25. Came back 50. And then it broke out the high. We're going to do it the right way. And it shift all the way up. The end of the move was here. Over here, we have something else. Boom. And boom. Okay? So, the first time this market came back into the zone, after this long, strong move, it came back 25%. This is going to be the lesson that a lot of you are going to say, wow, I got it. After a long move, after a strong move, the market will give back 25%, 50%, 75%, 100%. Once the market gives back 100%, we are going to reverse. Okay, write this down. Okay, there you go. Write that down. Okay. Type 1 inside the box once you got it. Go ahead and keep moving now. Who's having an aha moment? Who's having an aha moment so far? We got almost 250 people on a pop-up Zoom, a pop-up call. Perfect. Now, levels alert. Now, let's keep it going. Market gives back 25%. These are your rules. Market gives back 50%. Market gives back 75%. Market gives back 100%. Market does something crazy. It shoots all the way up past here. Here's the start of the move right here. Don't worry, you're going to see this. I want you guys to take a screenshot of this one because you're going to see it on the chart. And the moment you see it on the chart, I want you to say, wow. And then comes all the way back down. What are we going to do at this point? Someone tell me. Am I going to sell? Or am I going to buy? Buy or sell? Nation? Buy or sell? You sitting here getting one-on-one training. You should know the answer. Am I buying or selling? Well, the answer. You about to blow your account.
Buying! I meant to say buying! You made me nervous!
Well, don't blame me. Blame the market. Look at this. Boom. And there's your pattern right there.
We buy after inverted, it breaks through if it's not buy, inverted buy.
Okay? There's your pattern right there. Now, we go back.
Wait, I need a picture.
Too late.
Someone post a picture.
So now, the market goes up to the zone here. All you have is left shoulder, left shoulder, left shoulder, left shoulder, and the market goes back 25% inside of the zone. And then eventually, it does this. Boom. Boom. What percentage did it go now? Well, 50% would have been here. 100%. That's 100% of that move. Look at this. It came 100% of this move here, back into the zone here, which is 25%. Tell me when to stop.
Your favorite lesson.
Right shoulder is right here, Nation.
Stop. I can't be putting me on the spot like this.
Well, you on Go Live TV,
Oh my God.
okay? You on Go Live right now. We take this thing serious. Right shoulder. Now, I know that I put here left shoulder, but it's also the head. The head will eventually be the left shoulder. If the market ever comes all the way back down here, what used to be the head would eventually be your left shoulder. So we're going to move this right here, and we're going to put head at the bottom. Yep. So now look what happens. Boom. The market shifts up. Whatever you do on the left side will prepare you for what's going to happen on the right side. So now, boom. Now all of these zones over here is starting to show themselves over here. And we're capitalizing on these trades right here. Boom. Boom. Trade after trade after trade. How many times have you got into the market and you're saying, man, the market is not giving me my setup? Look at this. Where it says left, we're going to put no trade. You're mad right now. No trade. You got bills to pay. No trade. What about here? No trade, right? Another day went past. What about this? No trade. Another day went past. What about here? No trade. Now, that's what we got over here.
A market structure.
Trade. That's right. Trade. Trade. Trade.
So you mean to tell me if the breakout retests my right shoulder after inverted head and shoulders?
That's right. The market is doing the opposite. It's breaking out of the zone. Die. Now let's take a look at the chart. Let's take a look at the chart. Now, do anyone see I just showed you?
Me.
Wall Street Forex trading.
Anybody see what I just showed you? It happened on Aussie CAD. Left shoulder. Okay. Now, you see this little peak right here? That's 25% back into the zone, right here. Guys, I can't make this stuff up.
All over the place, like
25% back into the zone.
Oh man, okay.
50% back into the zone.
You want to see the flip side? He did it earlier.
How simple are these fib settings?
It is 25, 50, 75.
That's it.
The 100 is 0.
You guys are looking for the things that's a distraction. 25%. The market come to my 50%. The market come to my 75%. Did we break out of this zone 100%? That's what I want to know. Did we break out of the zone with a V bottom 100%? That's the question.
Yes.
Triangle. That's what we're looking for. We're looking for that triangle pattern. Right there. The triangle pattern is a 100% move with a flat top. All the way down, V bottom all the way up top, triangle pattern right there.
Wow, wow, wow.
Yep. Now look what's going to happen. I can show you where this market is going to go. Measured move with triangles. Measured move with triangles. I'm about to blow your mind. Look at this. Boom. Boom. Measured triangle move. Sorry?
I'm not sending the way back after this training.
What did he say?
He's not sending the
He's not sending it? There you go. I finally paid my dues.
Had a wow moment. Sheesh.
Okay? This stuff we can't get for free on Zoom.
Pay to play, someone said earlier.
Now look at this. Left shoulder, head, 100% move up top. Where's my buy opportunity? Right here on the left line. Boom. You buy right here and look at that move. Look at that move. Yeah. Would it be okay? Your drawdown was 16 pips. What's my stop loss? 50. My stop loss is probably here. Right here. Stop loss is right there. And look at this. This market shot up for 200 pips. Would it be okay if it took you 2 days and 17 hours to make 200 pips just by using this level system?
Sure.
Yes. You better time out.
That's right. We can look at any pair. Look at this Aussie CAD trade right here. This is the live market. I know some of you seeing this and saying, oh, left shoulder. Here's my left shoulder. That must be my head into the trade. No. Don't take this. Don't take this right shoulder. This could have been a fake out. This market could have easily did this. Went up. It could have went up, back down into the zone, and then back up. Don't take that trade.
Damn it, man.
So the way you're going to take this trade, it looks like this. That market shifts up, breaks out the zone. What percentage do we need to create a right shoulder? How far do we need this market to go in order to create the right shoulder? This market needs to drop down 100% of this move. This was the move right here that got the market over here. This is your triangle. I'm telling you, I'm going to show you something different. Boom. Boom. This is your triangle. Guys, you never heard about people talk about the triangles. I'm going to teach you something different. When you see the market, you ask yourself when it comes to levels, did we break out the high or the low first? And if the answer is the high, you start your triangle on the bottom like this. Boom, boom. And where did it break out from? To the top, right here. This market needs to come down 100% of the triangle and then come back like this and take the trade, giving you your head and shoulder pattern. I think that did it right there. Yeah, that was it right there. That did it right there. Let's take a look at this one. What did we break out first? The high or the low? At this box. Perfect. So where's my triangle going to start? On the bottom. Look at this. Here's my triangle. Boom. So now, what I need to see this market come all the way down and then come up like this and then this. That's it right there. That did it right there. Man, I think we outdid ourselves today.
Say wow, wow, nice. That's it, ding, ding, ding.
Uh-oh, the light bulb's going off?
Oh, yeah, we got light bulbs, we got fire.
All right, guys, look. Let's shut it down. We're going to come back tomorrow. Let's go head over to Zoom, and we're going to get some questions. All right, we're going to head over to Zoom, and we're going to get some